Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Moderna Inc. annual report. Moderna Inc., a biotechnology company, offers a wide range of medicines and services across various categories. The company's product portfolio includes messenger RNA medicines for respiratory diseases such as COVID-19, RSV, and seasonal influenza. Additionally, Moderna provides vaccines against latent viruses like cytomegalovirus, herpes simplex virus, and human immunodeficiency virus. The company also offers public health vaccines for diseases like Zika, Nipah, and Mpox, as well as bacterial disease vaccines such as Lyme disease. Furthermore, Moderna has a strong presence in oncology therapeutics with individualized neoantigen and checkpoint adaptive immune modulation therapy. The company's rare disease products include treatments for conditions like propionic acidemia, methylmalonic acidemia, and cystic fibrosis. In addition to its product offerings, Moderna has established strategic alliances and collaborations with several prominent companies and organizations, including AstraZeneca, Merck & Co., Inc., and the Bill and Melinda Gates Foundation. These partnerships enable the company to leverage expertise and resources in research and development, ultimately driving innovation and progress in the field of biotechnology. Overall, Moderna's diverse product portfolio and extensive network of collaborations position it as a leader in the biotechnology industry, with a strong focus on developing life-changing medicines for various diseases and conditions. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what may cause a stock price to increase significantly. The stock price of Moderna Inc. has increased significantly in the past year due to several factors. One major reason is the company's breakthrough in developing a COVID-19 vaccine, which has been widely adopted and distributed globally. The success of this vaccine has not only saved countless lives, but also generated significant revenue for the company. Another factor contributing to Moderna's stock price increase is its diversified pipeline of mRNA-based therapeutics. The company's innovative technology has enabled it to develop treatments for various diseases, including cancer, rare genetic disorders, and infectious diseases. This diversification has reduced the company's reliance on a single product and increased its potential for long-term growth. Additionally, Moderna's strong partnerships with major pharmaceutical companies have also contributed to its stock price increase. These collaborations have provided the company with significant funding and resources, enabling it to accelerate its research and development efforts. Furthermore, these partnerships have also helped to expand Moderna's reach and visibility in the global healthcare market. Lastly, the overall growth of the biotechnology industry has also played a role in Moderna's stock price increase. As more companies focus on developing innovative treatments and vaccines, investors are becoming increasingly optimistic about the sector's potential for growth. This optimism has driven up demand for Moderna's stock, contributing to its significant price increase over the past year. In conclusion, the combination of Moderna's successful COVID-19 vaccine, diversified pipeline, strong partnerships, and the overall growth of the biotechnology industry have all contributed to the company's significant stock price increase in the past year. Moderna Inc. market capitalization of $19 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Moderna Inc. holds a significant advantage in their industry. Moderna Inc. trades at a higher price-to-book ratio of 2.26 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 23% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost, and its management is unable to expand the business. The primary drivers of revenue growth or decline can be categorized into several key areas. On the growth side, net product sales have been boosted by an increase in vaccine sales, particularly for COVID and RSV vaccines, as well as expansion into foreign governments and international organizations. Grant revenue has also seen a significant increase, from $37 million to $22 million, while collaboration revenue has experienced fluctuations but remains a notable contributor. Licensing and royalty revenue has become a new source of income due to the recognition of Medicare rebates associated with RSV products. Research and development funding arrangements have also led to reductions in expenses. On the other hand, net product sales have declined due to higher product sales provisions, resulting in a decrease from $6,671 million to $3,109 million. Excess inventory has become an issue due to forecasting errors and advanced production planning for COVID vaccines. The transition to an endemic seasonal market for COVID vaccines has also contributed to revenue decline. Strategic initiatives, such as resizing manufacturing cost structures, have been implemented to address these challenges. Additionally, foreign currency risk is a concern, with 27% of revenue denominated in foreign currencies, expected to increase further. Overall, the company's revenue growth or decline is influenced by a combination of market conditions, customer demand, inventory levels, and strategic initiatives. The financial performance of the company has undergone a significant shift over the past few years. In 2022, the company generated a net income of $8.4 billion, indicating a strong financial position. However, by 2025, this had reversed to a net loss of -$2.8 billion. This drastic change can be attributed to two main factors: significant research and development expenses and a decline in customer demand for COVID vaccines. The company's profit margins have likely been negatively affected by these factors, as well as other external pressures such as decreased prices for products, increased regulatory burdens, and government price controls and regulations. The absence of specific information on profit margins for the years 2023 to 2025 suggests that the company has continued to struggle financially since 2022. The financial performance of the company has been a subject of concern. According to various summaries, the company has been experiencing a net cash outflow, indicating a lack of positive operating cash flow. The data from 2025 specifically highlights this issue, with an operating cash flow of -$1.873 billion and a net cash used in operating activities of -$1.873 million. These numbers consistently point to negative operating cash flow, raising questions about the company's financial stability and ability to generate sufficient funds for its operations. The company's debt level has undergone significant changes over the past year. Initially, the debt level decreased by 14% from $9.54 billion in 2024 to $8.13 billion in 2025. This reduction is a positive indicator of the company's financial health and ability to manage its debt. Furthermore, the initial term loan outstanding principal balance as of December 31, 2025 was reported to be $600 million, which is a substantial decrease from the previous year. In terms of interest expenses, there has been a notable decline in recent years. The interest expense decreased by 58% in 2025 compared to 2024, with a significant reduction in cash paid for interest from $24 million in 2024 to $10 million in 2025. Additionally, the company reported a substantial decrease in interest expenses for financing leases, dropping from $24 million to $3 million. These changes suggest that the company has successfully managed its debt and reduced its interest expenses, indicating improved financial performance. The performance of various regions and segments in vaccine trials has been a crucial aspect of understanding the efficacy of new vaccines. In terms of regions that performed poorly, it is noted that the Northern Hemisphere did not meet interim efficacy analysis in the P302 study. On the other hand, several segments have shown promising results. Older adults demonstrated strong immunogenicity with mRNA-1010 meeting all primary endpoints in an extension study of P303. Furthermore, adults aged 50 and above, as well as those 65 and older, showed higher immune responses against influenza virus and SARS-CoV-2, when administered mRNA aminus 1083 compared to licensed flu and COVID vaccines. These findings suggest that certain age groups may benefit more from specific vaccine candidates, highlighting the importance of targeted research in vaccine development. The management of the company is optimistic about its outlook and strategy. The key focus areas include effective cash management, investment in research and development, and optimization of manufacturing capacity and inventory management. To achieve these goals, the company will prioritize its R&D expenses, adjust manufacturing capacity based on demand, and invest excess cash balances in marketable debt securities. The company is also transforming from a research stage to a commercial enterprise with a diverse clinical portfolio. This transformation includes building domestic mRNA manufacturing capabilities under long-term agreements with government entities and resizing its manufacturing cost structure in response to the transition to an endemic seasonal COVID vaccine market. Overall, the management strategy is centered around managing cash flows, investing in growth initiatives, and optimizing operations to support profitability. The company's focus on research and development, manufacturing capacity, and inventory management suggests a commitment to long-term sustainability and growth. The company's financial strategy has been focused on retaining earnings rather than distributing them through dividends. Despite this, the company has made significant investments in itself by buying back shares. In fact, it has a long-standing policy of not paying cash dividends to shareholders. This decision is partly due to its credit agreement with lenders, which restricts dividend payments. However, the company has been actively engaged in share repurchases, with a $6 billion program authorization that still has $1.7 billion remaining outstanding. When shares are bought back, they are retired, and the purchase price is recorded as a reduction to additional paid-in capital. This approach allows the company to maintain control over its capital structure, while also providing value to existing shareholders through increased ownership stakes. Concerns about inventory buildup or supply chain disruption have been raised in several areas. One major concern is the potential for inventory buildup due to volatile demand forecasts, low product demand, and shelf life issues. This could lead to wasted stock and decreased efficiency. Additionally, there are concerns about production interruptions at third-party manufacturers, facility and equipment failures, and contamination risks. The company's efforts to scale up manufacturing capabilities and manage its global footprint may also pose supply chain management challenges. Furthermore, the company has experienced inventory write-downs of $291 million in 2025, primarily for raw materials and finished/semi-finished COVID vaccine inventory. Excess inventory and capacity due to mismatched demand forecasts have also been noted. Geopolitical tensions and trade policies have caused higher supply costs or delays, while climate-related physical risks could disrupt operations and supply chain. The company has also experienced losses on firm purchase commitments, indicating potential supply chain issues. However, it's worth noting that not all areas of the business have raised concerns about inventory buildup or supply chain disruption. That concludes the financial summary for Moderna Inc. Feel free to comment below, and I will be happy to answer them when possible.